All right, looks like we are live. We are good to go. So I will go ahead and get started. Good morning, everybody. Thank you for joining us today for our network welcome. I'm Jamie Chavez. I'm the president and CEO of the Westminster Chamber of Commerce. And each Wednesday, we bring you a live broadcast featuring one of our newest chamber members to introduce them and give them the opportunity to tell you about themselves and their business. If you're new to the broadcast, thank you for being here. We appreciate it. I encourage you to like and follow this page if you're on Facebook so that you'll get notifications for when we go live in the future. And if you're on YouTube, you can hit subscribe, and then you can also view all of our previous broadcasts there as well. We also offer broadcasts on Mondays, which are dedicated to city updates from our city councilors, Mayor Pro Tem, and our mayor, and other city leaders as well. These broadcasts offer a chance to hear what's going on down at City Hall, and so we hope you tune in for those. However, next week, mixing it up just a bit, and my interview will be on Tuesday at 11 with Councilor Dave DeMott, so hope you show up for that. We also reserve the last Friday of the month for county updates featuring Jeff Coe, Commissioner Tracy Kraft-Tharp. So stay tuned for that on the last Friday of the month to be informed on broader county matters. As you watch the broadcast today, please feel free to engage with us, leave any comments, ask any questions, or simply say hello, and we will address those during the interview. And now a warm welcome to Jason Howard with Elevations Credit Union. How are you?
Good morning. Good. Excited today.
Yeah, thanks for joining us. We'll just go ahead and jump in and maybe tell us a bit about your background and how you got into the mortgage industry.
Sure. Yeah. So I've been a loan officer for 21 years. I had a background. I was originally working after college. I worked in the restaurant industry. I was a corporate restaurant trainer and traveled around the country opening restaurants for about 3 years. In fact, I almost did an opening in Denver down at Park Meadows Mall. And I had a friend who transitioned into mortgage, and she said, I just came from an interview. You have to come do this. And this was, of course, 2003. And I said, I don't even really know what you're talking about, but I'll kind of go along with your play. And I went and I interviewed with a guy who was, he could have been a twin of Phil Collins, short, bald, British, fantastic accent. He was a heck of a salesman, and kind of took off from there. I started working with a company called AmeriQuest, which back in the early 2000s was everywhere. They were the big sponsors of Major League Baseball. They were the biggest mortgage company. And their philosophy was, we're going to hire people who have no knowledge, no experience at all. We're going to train them really well. We're going to work them to death, and we're going to turn them over in about 6 months. And that's pretty much what happened with me. It was almost right out of the movie Boiler Room. We had a group of guys from Long Island, New York, came out in very fancy suits and trained us very well, taught us all about mortgage, taught us how to sell. And 5 months later, I said, I'm tired of working 12 hours, and moved to a different company and slowly worked my way from company to company in Southern California back in the early and mid 2000s. And then 2007, 2008 came around, and the collapse that anyone who's old enough remembers kind of got caught up in that wave. Went through 2 layoffs within about an 8-month period of working for companies that were bought out by larger companies and then kind of turned into a black hole. And then in 2008, I went to Bank of America, very luckily, in Southern California. And I was there for about 4 years. And as that transition happened, as they bought Merrill Lynch and other companies, that's when there was the massive distress of home ownership, 2009, 2010, 2011. And I was reassigned to a group that worked on home modifications. A lot of people back in that time when there was the foreclosure wave, a lot of lenders provided options for help. And our group was assigned to do that on about a 6-month assignment. And when I moved to Colorado, I was finishing my 3rd year doing home modifications and learned that entire arena. And there was a long period when I moved to Colorado that there were no loan officers that knew anything about modifications or those kinds of things. And so I was able to talk to a lot of people who kind of had dabbled in that, didn't know how that worked. And I was able to help provide a lot of information on that over the last 12 years since I've been here in Colorado. I moved to Colorado at the end of in 2012. My wife is originally from here, and we decided it was going to be much easier and much more beneficial to start a family in Colorado as opposed to Southern California. and been here ever since. I came to Elevations nearly 2 years ago, and this is home. This was just a lot like the company I worked for before the collapse in 2008, and I just could not be any more ecstatic to be here.
Yeah. So what are some of your favorite things about working for Elevations?
It's funny transitioning from my former employer, where I was for about 8 years, here to this place where Elevations it's much more of the member driven, the family feel. We do a lot of things that other lenders can't do, a lot of things other lenders won't do, but it's more about our approach to not only helping the buyers, the borrowers, whatever the case is, but also helping our partners, really working very, very closely with our agent partners, our title partners, our financial advisor partners. That's almost as much of a focus, which is great. Having worked for a company that had no focus on those people, it's been a wonderful transition. That's been absolutely the highlight.
Awesome. And what kind of trends are you currently seeing in the mortgage industry or the mortgage market?
Yeah, anybody who's been kind of dabbling really ever since COVID, it's been, a wave since 2020 that's been unprecedented. We had the complete bottoming out of the rates during the COVID period, and most loan officers were sleeping on their desks in their offices because everybody and their dogs were refinancing. And now we've moved with the economy over the last 2 years to a much different environment. Interestingly enough, there was a good inflation report that came out today, and rates took a really good turn for the positive, which we haven't seen. Ultimately, it's a very unpredictable time. There's days when the market goes one direction, which say rates should go this way, and they don't. And that's really something we've seen since COVID. So I think that in this market, especially all over Colorado, it's that period where it's a lot more about the big picture. A lot of people say I shouldn't be buying right now because the rates are too high. Well, Colorado is actually ranks very, very high in affordability. So a lot of people make good money, don't have a whole lot of debt here in the predominance of Colorado, so people can afford more. You're still seeing, regardless of where rates are, massive growth in home equity. And so people are saying, well, you know what? I can afford to buy a house with where the rates are because I know that over the next 2 years, 3 years, I'm going to make 20, 25, 30, 40, 50,000 in equity, and I want to take advantage of home ownership. And that's why you still see a house go on the market. And even with where rates are in that 7%, high sixes ballpark, you're still seeing 3, 4, 5, 10 offers within the first weekend. So it's challenging on all fronts for a lot of people, but there's still a wonderful opportunity.
Yeah, definitely. And how do you kind of see the housing market evolving over the next few years? Do you have any insider predictions?
Yeah, I mean, going back to before the collapse, I've kind of given up on trying to use my crystal ball, but I think that there has been a lot of attrition. There's been a lot of loan officers who have moved out of the market in the last year. Same with realtors, and with a lot of the legal changes in the realty scope over the last several months, there's going to continue to be that move. As long as there continues to be so many people moving to Colorado from other states, and you still have a wealth of builders that are trying to keep up with that inventory, it's going to be, a competitive market for people to try to find houses. You see a lot of that with the first-time homebuyer area, where it can be really, really challenging at certain price points, because you also have a lot of investors that are coming from California, New York, with huge amounts of cash that are just buying up properties in cash. And a lot of people think, well, if my options are selling my house for a little bit less for all cash, or talking to 14 first-time homebuyers, I don't want what could be risk there. And so those are challenges that are going to continue to remain until the influx of people to Colorado slows down. If we do see the market change and rates start to drop again, it's going to continue to be just as competitive until there's enough housing for the people that are moving here.
Yeah. You mentioned first-time home buyers. What advice would you have for a first-time home buyer currently?
Yeah, I think that the first thing is going through the education process. A lot of people think I need to get pre-approved, and that's great. I can go through and I qualify for a $500,000 house, but I qualify for a $500,000 house, but my budget says I need to be staying at $300,000. So I think that a lot of it's taking the time, going through the education process, learning about mortgages and learning your budget and what you can afford. There's almost always a gap between what people can afford and what people qualify for. And that affordability piece is just as, if not more important. I think the other thing really is to be patient. A lot of the first-time home buyers I'm working with are going through and making 5 and 6 and 8 and 10 offers, and they're going against people that are bidding $10, $20, $30, $50,000 over asking price, judging them at a perfect price point. And so I think that be aware that it could be a little bit of time. Is it a good time to buy? Yes. But if you're a first-time home buyer and you're in that price point that's going to be really competitive, just be patient. Eventually, the right house is going to fall into your lap, but it might just take some time.
Yeah. And do you have any advice for people that they might be in that same group or maybe not, but people that are looking to improve their credit score before they apply for a mortgage?
Definitely. There's a lot of misnomers out there about credit scores, about how credit can be impacted and be affected. And I think that first, finding a company and finding a loan officer who is versed in that can share with you little things. People think if I have my credit run right now and I talk to one lender, then I go through in 2 days and I have my credit run again, it's going to drop my score. Not knowing that you have a shopping window, that you can have your credit run multiple times and it doesn't negatively impact you. Also looking at the things that you can do to, okay, let's say I'm in a position where I don't qualify now, maybe I'm 10 points away. What are the things that I can do? Certain companies, such as Elevations, we have credit scoring models that say, okay, when we run a credit report, it gives us tips of things that you might be able to, hey, if you pay this much down on this credit card, it could boost your score by this amount. And maybe that's all we need to save you 0.25% in interest rate or $3,000 in closing costs, things like that. So I think it's finding not only the lenders that are able to do that, but really the people who are experienced doing that and really understand what they're talking about, have gone through this process several times, because still there's a lot of loan officers that have only been in this industry since 2020 and 2021 when COVID started and haven't run into a lot of the difficult situations, don't really know the obstacles, the craters that can come up through the process.
Yeah, that's a really good tool to be able to kind of, use to help people out there. And then kind of in that same line, I know this might vary too, depending on where you are in your home buying process, but how much should someone potentially have for a down payment on a home?
Yeah, it's a good question. I mean, ultimately, I think it's a teeter-totter effect. It's one, how much money do I need? And are there programs out there that can help me get to where I need to? But also that affordability piece. It's great if I have $20,000 that I could put down for a house. Okay. Can I afford the payment at that house? Or if I save another $30,000, if I save another $10,000, is that going to lower my payment enough to be where I need to be? And so figuring out the calculations to be able to do that. Or am I in a spot that to get my payment where I need to be, I really need to be saving up a lot more? There's a lot of also stigma around first-time home buyers, and people think that as a first-time home buyer program that there's benefits to it. And there's a lot of your down payment assistance programs that can help with that. And one of the challenges to keep in mind is that most down payment assistance programs, this is what people commonly think of with that, there's going to be restrictions. A lot of times there can be more restrictive than just the loan itself. So yes, you can qualify for a $400,000 house. I need an extra $20,000 in down payment. Well, that down payment affordability program may restrict it to only being able to afford a $300,000 house or a $350,000 house. So it's important, again, to talk with somebody who can do the research in these programs, know where the restrictions could be, because a lot of these programs are very pinhole to be able to get into the right program.
Awesome. Thank you. And we do have a question from Dave. I'll pull up real quick. Going back to people moving here, do you really think people will still move to Colorado? Podge just named Denver as one of the top cities from which people are moving away.
Yeah, absolutely. I mean, I think that there is some, influx or outflux of Denver, but a lot of the other surrounding cities are still seeing a lot of people. You're seeing a lot of growth in Greeley. You're seeing, as things are moving east, you look at a lot of the construction moving into Thornton, going east side of I-25, a lot of growth in Colorado Springs. You see the expansion gap of going into Castle Rock and moving down south of those areas. So a lot of the people who are moving out of Denver are the people that are higher price points, things like that. But you still, in those lower price areas, there is still a lot of the influx coming from California. There's still a good amount of people from Texas that are moving from that area coming in. And the net is not the 10,000 people a month that we did see a couple of years ago. It has shrunk considerably, but it is still at a much higher rate than the number of houses that are being created on a given basis. I think that there was a report that came out recently that said that, I think it was March or April, there was up to over 7,000 houses in the Denver metro area, the 5 counties that were on the market, which is up considerably from the 2,000 and 1,600 that we've seen the last couple of springs. But a lot of the new construction is still struggling to keep up with the number of people that are influxing, which is why you still have so much competition on anything that hits the market, even at the $1 million plus price points.
Yeah, that's a good question. Thank you, Dave. Can you walk us through just like the typical process for, from start to finish for applying for a mortgage?
Yep, absolutely. And there's two fundamental channels that when people are starting the process, they tend to go through. There's pre-qualification, which is very, very general. That's kind of your ballpark avenue. I make this amount of money. I have this much amount of debt. I want to keep my payment around here. And loan officers are going to work it backwards to say, okay, well, based on this information, you're going to be in X price range. Usually when we got to start there, I say, okay, once you've hit that, now do some window shopping. Talk to a realtor, use some of the websites, and are you going to be able to find a house in that price range that's going to meet your needs? If you are, great, you're looking to move to the next step. If not, what do we need to do to get you more into your price range that's going to meet your needs? Once you've at that point, then the pre-approval is going to be your next stage. That's where you're doing your application, you're getting a copy of your credit report. Lenders are going to be running your loan through an underwriting system, and depending upon what type of loan you're doing, there's multiple types of loans out there. It's going to come back and say, yes, you're ready to go. Here is a letter. You're ready to make an offer as soon as you find the right house. And normally what I say is if you're at the point that you're actively going out looking at houses, when you find the right house, you want to make an offer, you're at that pre-approval stage. If you're still kind of thinking, okay, where can I be 6 months from now? Where can I be a year from now? Then you're probably more at the pre-qualification stage. And a good loan officer is going to say, okay, what do we need to do to get you there? Is it more income? Do we need to save more down payment? Do we need to work on your credit? What do we need to do to get you where you're ready to be, where you need to be?
Awesome. And Dave has another question. Do people have to have a previous relationship with Elevations to discuss home buying?
Absolutely not. Thanks, David. No, not at all. We'll speak with anybody. We do require you to be a member to do a loan, but that's certainly something that anybody can do. You can open up a small account with as little as $5 in the account to be an Elevations member, which we do need when we get to actually doing a loan. But no, having those initial conversations, absolutely not. And ultimately, any good loan officer is going to play, they're willing to play second base. If there's a better lender, better loan option out there, I'll tell anybody that. We're not always the perfect lender for everybody, but I can guarantee that anybody is going to get as much information from me to make sure they're in a best position to be a good home buyer, a successful homeowner. When the time is right, I'll have that conversation with anybody at any time.
Awesome. Thank you.
Yeah.
Can you share with us like a memorable story when you helped someone get a home? Maybe it was their first home or their dream home or just something that sticks out to you.
Yeah, there was a couple I worked with out in Brighton when I first moved to Colorado, shortly after I moved to Colorado. So this is about 9 years ago. And they were first-time home buyers. He was a military veteran. I've done veteran loans for 15 years, and they're always the best to work with. And these people were going through the process, and there were some questions regarding the appraisal. And they were so excited. They had their son, who was 7 at the time, and they were ready to get into their own house. And there were some questions around the appraisal. And I spoke to the realtor and said, hey, just an FYI, there are some issues that we could have with an appraisal here. I'm just letting you know. Turns out, no issues at all. We got through. I let the agent know. We're fine. We're good to go. We get through, the loan was approved, no problem. We're coming to the closing table. They're very excited. They're all packed up in their U-Haul. And the realtor, turned out the listing agent had not informed the seller that everything was fine with the appraisal. She just said, we're selling. And so our buyers, who were all packed up in their U-Haul and out of their house, came to the closing table, and she had not moved out. She had not moved any of her stuff out.
Oh, no.
And it was a very, very uncomfortable situation.
Yeah.
And we went through, and I said, after an uncomfortable conversation at the table, I said, hey guys, no problem. Why don't you guys come and stay? I've got a fully finished basement. We'll get you into a hotel at night, but it's 4 PM. It's going to be tough for you guys. They came, spent the night in my basement, the 3 of them. And then the next day, the realtor got them a hotel, got them all kinds of room and everything, and accelerated their move out process. And it was one of those circumstances where I knew how excited they were through this entire process. Our little speed bumps who I had concerns about and kept them informed, all of them turned out to be nothing. And then we had a big speed bump at the end with them just not being able to move into their house. And after that, every time I would, they would come into my bank, I would see them and chat with them for a better portion of 8 years until they ended up moving out of state. But it's just little things like that. It was kind of, it was a bump that shouldn't have been a bump because of the over communication that I given. It just wasn't caught the right way on the other side. But that's one that has stuck out to me for quite some time.
Yeah, I wonder if you and maybe the realtors that were involved every time now you're just double checking, like you're moving out, right?
Yeah, absolutely. And it's the same thing. It's on the same side with so many more lenders coming into this industry since COVID, and very, very similar with a lot of real estate agents. I mean, one of the things I've learned about this industry is that you can go through and you can study your rules, study your guidelines, know your pricing, know your systems and everything. But ultimately, until something goes wrong and something big, and you remember that for the rest of your career, you never know what you don't know. And that's why having a lender who's been through so many things a lot of times can be a great partner for a brand new realtor. You know, I had one 2 years ago where we had an appraisal come in low below, and the realtor said, "Okay, what do I do?" And I said, "Well, first you probably want to call your managing broker and have a conversation on that front." But those little things, there's so many people that, you know, are so new that until something goes sideways, you don't really know what to expect.
Yeah. Well, kind of along those lines, what would you say is the most challenging part of your job, and how do you handle it?
You know, I think that a part of it, especially in the market right now, is staying positive on behalf of buyers because of the fact that it can be such a long process. And it's hard because when you get pre-approved, you're so excited. I can afford this house. It's less than what I've been paying for in rent. I'm so excited. I'm going to have my own yard. I'm going to have my own man cave. I'm going to have my own garage that's going to be mine. And then he goes, and it just takes a little while longer, and that can be so discouraging. And it's kind of, when I moved to Colorado, I was under contract to buy a first house and was very excited. And then there was a leak and there was a bunch of damage that the listing agent never told us about. And we ended up canceling, and 4 hours later, we were in the house turned out to be our first house of our dreams, where we lived for 8 years. And it's very much that happened for a reason. And I definitely believe that in this market, that it requires patience, but everything's going to work out as it's supposed to.
Awesome. Yeah. Well, we've talked a lot about you and your experience, and you know, the ways that you can handle things better because of that experience. And so let's talk a little bit about Elevations and how Elevations maybe engages with the community, or any specific programs or initiatives that Elevations has for homebuyers.
Absolutely. So currently, Elevations is the number one lender, home lender in in Boulder County, number 2 in Larimer, number 3 in Broomfield. Anybody who is an Elevations member of Elevations was originally the University of Colorado Credit Union. It started on campus at CU and has grown from there. And it's continuing to grow. The footprint has been predominantly based in the Boulder, Longmont, Loveland, moving into Fort Collins space, but we are starting to grow out. We have a loan center in Lakewood. We have a loan center in the DTC. We have a new loan center in Greeley, and we're growing that footprint out. I was one of, if not the first loan officer who had been predominantly based on the east side of I-25 that came to Elevations. But Elevations does a couple things aside from what I mentioned earlier with the connection with our partners, our real estate partners. We do have certain programs that other lenders don't have. We have a large portfolio that we do of our own loans, which means they're not sold to investors such as Fannie Mae, Freddie Mac. We do VA, we do FHA, we do USDA, but there are certain programs that we keep on our portfolio that allow us to look outside of different guidelines. Things like non-warrantable condos, which is a massively growing space right now with all the challenges that have changes in insurance, changes in claims that have happened, HOA reserves that are growing. More and more condos are becoming harder to buy. And if you can't fit into the box of a conventional loan, you have a non-warrantable condo that we are able to lend in a lot of certain cases. So that's a big niche. We have a lot of specialty programs for higher price properties. But kind of some of the things that I look at are Elevations is a couple-time winner of the Malcolm Baldrige Award, which is we're the only credit union in the country that has won it multiple times. And it's a big award given nationally to companies that really look at policy, look at how they line up their business models and things like that. We've gone through that process several times. And again, the only nationwide credit union to win that award twice, which is very, very big. Elevations takes a lot of pride in both our Elevations Foundation, which does a lot of specialty programs, a lot of scholarship programs, and we kind of tout that very highly. And having seen a couple of years of that, those are some cool programs that we do. We do a ton of educational programs in all spheres, not just mortgage, but investment strategies, financial planning strategies, tons of things. It's just mind-blowing the amount of things we do for a relatively small company, less than 600 people.
Yeah, that's awesome. I do have one more quick question. I know we're running out of time, but one thing I hear a lot from realtors is if you find your dream home and it's the right time, go ahead and, pull the trigger. Like, you can always refinance. And so maybe you can talk to us about the benefits of refinancing and when that might be a good idea.
Yeah, there's been a lot of things in the press about the golden handcuffs, the people who have 2.5%, 3% rates in their home, and they want to move out of their home and say, well, if rates just came down a little bit, if they came to 5% or whatever the case is, I'd be willing to make that move. So many people have been going through over the last 2 years where rates have been in those 6s and moving to the 7s, even close to the 8s, where it's like, I can afford this for the short term. When the rates change, I'll be able to refinance and go to a lower rate and remove mortgage insurance or, just overall lower my payment. I can do it for right now. It's a good approach, but we were also expecting a lot of those rates to start turning at the beginning part of the year. And we're almost halfway through and we haven't seen that yet. Yeah. There's still a lot of hope. There's still a lot of optimism, but you just want to make sure that you have that plan of, if it's not a year that you're going to have a rate of 7%, if it's 2 years, if it's 3 years, are you able to manage that? Are you able to afford that? If you are, definitely take the dive. If not, maybe it's like, okay, let's look at our nest egg a little bit more. Let's look at our long-term plan. How long are we going to be comfortable? Because we're going to continue to see increases in homeowners insurance rates here in Colorado. We're going to continue to see increases in property taxes here in Colorado. So even if you have a fixed rate, you're still going to see your payment going up because of those factors. So it's good to dive in. You just want to have those long-term plans available that, again, loan officers should be having that rainy day conversation with to make sure you're in the best spot for it.
Awesome. Yeah, thank you. Well, is there anything else that you would like people to know about you or Elevations before we log off here?
It's funny. I think that I've been in this industry so long. I've played in different sides, doing the modification piece, having been a manager before. My wife asked me kind of during COVID, she said, do you still plan to see yourself doing this 5, 10, 15, 20 years from now? And I said, yeah, because it's a situation where, having gone through the collapse, I love what I do. I love being this. I'm not a fantastic manager. It's not my best suited position. I learned that early on, but having the conversations are what I really, really love. And it's not always about rates. It's not always about fees. It's about the education piece and making sure that you understand every single aspect of it. And that's absolutely why I do what I do and have done for so long.
Yeah, that's awesome. Well, thank you so much. I really appreciate you being on the broadcast, and thanks to everybody who joined us today, and everyone have a good rest of your week.
Thanks, Jamie. I appreciate it.
Yeah, we'll see ya.